Welcome back to Market Day Report. We'll start this segment in the softs. Looking at the cotton market, cotton has been the top performer as of late in the row crops, with gains of over 19% year over year. 81.60 on the new crop D's, it's up 84 points, 86 points higher on the March at 82.40. Mentioned this yesterday that we've seen the first net long position here in 2 years in the cotton market. And ironically, it's been 2 years since we've seen 81 and 82 cent cotton. We'll start there and then spring our way over into wheat. And here's the spring wheat contracts moving higher now for the 7th straight session. Hard red is lower, down a penny and a half, 6.46. Chicago, July, penny and a half lower, 6.04 and a half. How about bean oil? Yeah, triple-digit gains now, 71.21 on the May contract. It's up a penny and a half. We're looking at soy meal contracts in mixed territory. Now over to the beans. They were lower yesterday, but look at the gains, a dime or more on all of the old crop contracts, with the May at 11.75 3/4. Finally, the corn market, and we're higher here, up a couple of pennies on the old crop, 4.54, and the D's up 2 3/4, 4.82 1/4. In studio with us, Chris Swift, Swift Trading. Interesting how we're starting the trade here today with some good strength.
Oh, absolutely. And we've got two factors pushing the grains right now. We've got drought and we've got the energy market. So we see the bean oil higher again. You said triple digits on that. New contract highs, if I'm not bad and mistaken, are very close to. That's a really nice bull market and is following energies right along, keeping our beans buoyed up. And we know that we've got some drought aspects. And even though in the kind of central Corn Belt portion of the northern section, all that looks in good shape. But when you look in that Mississippi River Delta, where a lot of our beans are going to be planted there, that tends to be a heavier bean production than corn production. But all of it is vying for drought land right now. And so we've got some interesting drought perspectives out there looking at. We get the crop progress now, and we're nowhere above or below anything last year. But in the next 2 weeks is when we're really going to get started hard and heavy. And it'll be interesting to see if we get any kind of increase in moisture from that time frame. And then, of course, the energy complex. It continues to be higher. I think it'll continue to be higher. We're going to fluctuate in enormous ranges, but we're a good $40 higher in the crude oil market than where we started this rally from. I think we continue along those lines in there. And I don't really see much that's going to change it other than just the fluctuation of it. And it's going to be wild. And diesel fuel usage is fixing to get really big here. We've already had a big military conflict going on. Now we're fixing to put 180 million acres worth of corn and soybeans in the ground.
Yeah, good points here. And by the way, you can open up the Strait of Hormuz. You can end the whole thing. But it doesn't get back to being normal for quite some time.
No. And inflation. We are inflating in every way possible. We dumped $7.5 billion into the system yesterday. We've been in quantitative easing since January. We are still inflating right now. And so there's no really reason to think that prices would have a big bear market just yet.
Yeah, good points. All right, quick break. Back with more markets and Chris Swift. This is Market Day Report. Now, this market was lower for 9 straight sessions. We moved higher yesterday, except for the October contract, which trades lightly and was in the red. So you could say the October has been lower 10 straight sessions. Talking hogs right now. And the lean hog market now is higher across the board. Some bigger gains out of the June contract. 103.30. It's up $1.57, $1.32 higher on the July. It trades 105.27. August up over $1 at 105.17. How about live cattle? Well, live cattle futures are higher. Gains of 25 cents to 90 cents on the December contract. But for the most part, trading 237 up to 246. Not looking at the April because that one expires in about a week, and really just chasing the cash trade, right? feeders. Kind of the same story here. The April chasing the index, but the May at 363.75 up to 65. A guy that knows a lot about the livestock markets, Chris Swift. Chris, what are you watching here?
Well, we're looking at the overall aspect of protein increase, protein production increasement right now. And even though beef is not, what we are seeing in beef kind of is like the kitchen sink. We start, the water doesn't go down quite as fast as what it used to, and then it starts to bubble up a little bit. Then we start to smell. And that's kind of where I think we're getting in that. And when we look at it, we've seen the consumer make enormous shifts in how they consume their proteins. Grocers and restaurants have made big shifts, and we know that not all of them are as profitable as what they have been, but they have had to make shifts to bring that profitability in. Then we look at our packer, $220 a head loss last week. Our cattle feeder, $160 a head loss last week. Then we move up into our backgrounder that paid an all-time new high. And for the calves on there, the cattle feeder paid an all-time new high via the feeder cattle index, and it's just not moving. So I think have reached a point to where unless we unclog the bottom end of it and we can get more beef to move, we get the consumer willing to pay a higher price, we're going to start backing up a little bit. And it may not be bad. And I think, unfortunately, if it stagnates, it could be the worst. Now I don't get low enough prices to help me out, and I sure don't get high enough prices to overcome what I've already put in input costs.
And how does that old saying go? Nothing cures high prices like high prices.
Absolutely, absolutely. And so we noted that both chicken production and egg production has increased significantly. Pork production is not going down anytime soon, and we know that the weights increase, slaughter weights have increased on them too, and that hog market about still a $13 basis spread between the index and that. So we look for hog prices to continue to kind of soften just a little bit. Beef prices staying lower. We inverted again. Now we got select trading higher than we do the choice market. So we're kind of meeting some kind of equilibrium here that we need to push through. And unfortunately, I don't think we're going to be able to push through it pretty quickly.
And I heard Dr. Mark Johnson, an Oklahoma State beef breeding specialist, he hosts a segment called Cow-Calf Corner, mention this past week that look at how many Mexican feeders have been coming in.
Sure.
And then look at our choice select now, and you'll see part of the issue that we have. We're not getting those feeders in, so everything we have is grading higher.
Right, and two, we do have an increase now in beef produced in Mexico imported into the U.S. They have now equaled all of 2025 beef imports into the United States, and we've still got 8 more months to go. So they have really changed and taken advantage of what is a very big disadvantage to our U.S. producers, and they turned it into a huge advantage for their producers.
Yeah. What is it? Like your rubber band. You mentioned your rubber band. You start pulling, and you get that tension, and it's going to go somewhere.
Yeah, somebody's going to have to do something.
There, good points. Okay, Chris Swift, Swift Trading.
Maybe one of those Chinese finger traps that you pull.
Yeah,
something
my
like
fingers
that.
were stuck. Yeah.
Well, always good to have you in the studio. Thank you, Chris.
Thank you.